Hello everyone and welcome back to the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for the second week of 2021. We're going to go ahead and cover the dates from the 11th to the 15th of January 2020. We're going to go ahead and quickly start off this video by taking a look at last week's changes as far as the 4th to the 8th. Then we're going to go ahead and jump into 3 articles that were sort of covered this week as far as some economic news, and then we'll go ahead and cover the 4 main indexes, take a look at stock futures going into Tuesday, take a look at the entire S&P 500 here performance for this week as far as what stocks were up, what stocks were down, what sectors were weak, what sectors were strong. Then we'll go ahead and take a look at the oil, dollar, silver, gold, bonds, take a look at the current 10-year rate and mortgage rate. So this is just a really quick recap of the week, going over some of the recent news and changes for this week. I like to do these on a week-by-week basis to kind of keep track of what is going on in the market. And this week here is a pretty big week with the President-elect Biden going into president this week. So we may see the market react a bit to this. I guess we'll kind of see how it plays out this week. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Okay, so the very first week of 2021, we were pretty positive. We had the S&P 500 up 1.83%, Dow 1.61%, the Nasdaq up 2.43%, and the Russell 2000 up a whopping 5.91%. So all the indexes across the board are very positive for that first week. Silver, gold, and bonds were down from around 1 to almost 4% there for those 3 right there. Then we had 10-year rates, the 10-year bond rate moving up from 0.92 to 1.10. We had mortgages remaining the same at 2.95. And overall, it was a pretty positive week. I know my portfolio was up. We have Emil here up with his best week ever, up at 5.12. So that was very positive to kick off our 2021. Now, a couple economic news that I was tracking this past week, that gold has been on the rundown as of year to date, or the last about a month. Gold has been sort of melting a little bit faster than with inflation. So here, gold prices melting fast amid expected rise in inflation. There's so much money that was being printed out there. If you guys follow Graham Stephan, I know he just put out a really good video going over the M1, M2, M3, and what they track as far as how much money is in individuals' investment accounts and their savings account and the overall economy. So that was a really interesting video, and I talked a lot about how all this money flow in the market will potentially increase inflation, but that's much better versus deflation in this time period. Then we have Tesla beginning to start their delivery of the Model Y over in China. So here they don't have any numbers right now, but this is expected to be a big thing here in 2021. So China is one of the key markets for Tesla, as it was looking to increase its vehicle sales volume from about 500,000 in 2020 to 20 million annually over the next decade. So that is huge. So Tesla had delivered roughly 500,000 vehicles in 2020. So this gigafactory being opened over in Shanghai is going to be pretty crazy for the upcoming potential of Tesla. So I thought that was really interesting news. I know a lot of investors are out there having been invested in Tesla or invested in Tesla. So I thought that was really interesting. And it turns out that China was one of the only economies here in 2020 that had showed some signs of recovery. And I know prior to March of 2020, when the whole thing had started kicking off in September through February of 2019 and 2020, China's economy had been hit hard. The stock market over on their side was slammed. And then this site here actually has some pretty good numbers as far as their economic performance, their GDP. Their GDP that first quarter of 2020 was down 6.8%. But as 2020 went through, every other economy in the world had gone down. It actually had a negative performing year for 2020, whereas China was able to quickly recover from that negative quarter one, make it up in quarter two, quarter three, quarter four, and actually come out ahead of where they were at in 2019, 2018, and so on. So that was really good as far as this. I thought that was an interesting article, just going over their V-shaped recovery, but we might have some slowdowns ahead, especially with that new strain that is going around that we've all seen in the headlines here recently. Now, with those, with that news kind of out of the way, let's go ahead and begin our main index coverage. So the S&P 500 was down this past week, so we had a pretty positive week. Remember that first week. So here we are in second week. We're getting closer to the election, and what I don't know if I guess we'll see how this week kind of plays a part in the market, how it becomes affected. New presidents being elected and put into office, and everything's on lockdown. I think there's like some 25,000 guard units that have been deployed to the Capitol. So I guess we'll see how this week plays out and how it affects the market, if it does. It's always going to affect it a slight amount. It won't affect all the stocks within the market, obviously. So the S&P 500, a few of those companies may be affected here, just potential, but overall we might not even see anything. So the S&P 500 was down 0.83. It is still up here to date by 0.32%. The Dow Jones down 0.63. This is up by 0.68. So right now the Dow Jones is slightly ahead, kind of interesting. We have the Nasdaq this week pulling back by 0.29. It is up 0.86 here to date, and we have the Russell 2000 currently first place right now, up nice again, 1.54%. Another interesting article that I had seen out there, but I didn't include in this video, was that there's many cities such as New York and a few others throughout the United States that are really pushing, their mayors are really pushing to reopen the economies. So I guess we'll see how that plays out. It seems to be really good for those small mid-cap businesses, and the Russell 2000 is filled with it. So here they are up 1.54, year to date 7.51%. Currently, stock futures, with it being Monday as I'm recording this video, I went ahead and took a look at stock futures. How are we looking going into Tuesday? As today is actually going to be I believe it's the 20th. So we're going to have Wednesday is going to be the 20th. So yeah, we still have another day until all that fun stuff. But overall, it could be potentially a good day here on Tuesday. And then we're taking a look at the entire S&P 500 map for this past week. So here we are over on finviz.com. We're looking at the 1 week performance. We already saw that the S&P was down this week by 0.83%. Now, why was it down by 0.83%? Well, all those FAANGS stocks were pretty much slammed. Amazon down 2.46, Tesla down 6.12, Netflix, Disney, Google, Facebook, Microsoft, Apple, across the board, all those FAANGS stocks. Then we had financials and the credit services also being down massive. Visa 6.43, MasterCard 8.64. So there's definitely some pullbacks in some of those high-flying companies. So last week, I believe a lot of the FAANGS stocks were down as well, but the overall other sectors were pretty strong. I remember healthcare being pretty strong. I think medical, oil, I think every other sector in the S&P 500 had been pretty strong and was able to kind of outweigh the loss from the FAANGS stocks. But FAANGS stocks make up around 25-30% of the S&P 500, and all those other sectors out here also had a bit of red at them. So this week it just kind of, it double flopped. So we were on the red this week. So I do see that oil and gas were pretty positive. So we have Exxon at 5.34. Utilities were also mixed there, but for the most part, looks pretty positive. Banks overall, JP Morgan, Bank of America, pretty positive. But besides that, and in the center there we have Avi. Avi, I've seen a lot of investors talking about taking profits on Avi right now. Should you be selling Avi here at $110? And I know in my portfolio over on Merrill Edge, I do currently hold Avi. I'm not sure where I would like to begin and start taking profits. I may not sell out of all of my position, but I think at $110, I think this is a good opportunity to relook at the stock, see where it is currently valued, does that make sense? And maybe take profits on a bit of it, not sell out of it completely, but take profits and look for other investments that could potentially offer more growth but are currently down here for the moment. So maybe I'll be taking a look at some of the FAANG stocks here in this upcoming week. Oil this past week down 0.23%, year to date up 7.09. We had the dollar creeping up just a little bit this past week, so we started at $90 here on the 12th and crept up to 90.57. Did have a little bit of a pullback there towards the end. Oh, okay, looks like this is just, it's always going. So if we were to look at the cutoff here on Friday or over the weekend here, it looks like it had been pretty positive up at 90.90, but has been slowly pulling back into going into this week. We have silver down 2.38. We already saw that article here with gold prices kind of melting fast with inflation. I'm not sure if inflation plays a big part in how silver. So we also have gold down 1.26. So if we look at the 1 month performance of gold, it had, I don't know if that was a high here. It looks like it was a high at 194.45. It may have been a high right there, but since then, in early January, it has just been creeping back. Oh, okay. So looking at the 6 months, this is the high right back there. About midpoint or a little into August of 2020, gold had hit a high of 194.45, and it has just been downtrending these past few months. But we can see here in the short term, since January early, it just hasn't gone anywhere but down. So it may see lows of below in that 160 range, or it could even push further beyond that. We also have the 10-year rate. Oh, this is bonds. So bonds, I think besides the Russell 2000, bonds was the only thing of the indexes or the ETFs that I tracked that were positive. This was only up by 0.10%. So nothing big and major. We also had that 10-year yield. We have the 10-year bond rate at 1.10. So this remained the same, 1.10 to 1.10. No changes there for the 10-year treasury. And mortgage rate. So I'm looking at locking in my mortgage rate. My property is getting built. They actually have the second floor on it. And I might start posting some pictures as far as the progression of our new home on Instagram. I think that'd be kind of interesting to kind of showcase some of that. It's really exciting to kind of watch a house from the ground up just get built. Have the ground completely just barren and dirt, and then they come in there, they lay out the slabs for the foundation, they pour the foundation, and then it just kind of builds up from there so quick. Week after week, there's so much that goes into just changes. So that's pretty interesting. But I would like to lock in a rate here soon. I know mortgages are anywhere from about 2.25. I've seen numbers at there of 2.25 to about 3%. So we'll kind of see how this plays out. If you guys have had any mortgages here locked in recently, let me know down in the comment section below. What has been your fixed rate mortgage? Did you go with a 30-year or a 15-year note? That'd be really interesting to kind of find out. And outside of that, we did post one video this past week, kind of kicking off your 2021 journey with M1 Finance. I do have a lot of friends who are brand new to investing. They don't want to go out on Robinhood or Webull and start trading in and out of stocks. I've talked to them in the past as far as if you buy a stock and it goes down, your mind's going to be telling you, your stomach's going to be telling you that you need to sell that stock, but you just need to buy more of it in most cases. And especially as a brand new investor, don't even bother with single stocks. Go straight into buying a diversified ETF. And M1 Finance, I always ask them, hey, do you want to be more passive? Do you want to be more aggressive? Buying in and out. Buying in and out, it's going to potentially cause more harm versus good. Be more passive and just kind of deposit it, let it all flow for you. It's going to be more beneficial. You don't even have to stare at your account in some cases, and over time it'll just progress. You deposit money, it auto invest. So I've kind of talked to a lot of friends going over their options of taxable and retirement accounts, and then do they want to be more passive or aggressive? So M1 Finance fit the model for what a lot of my friends were looking for. So I went ahead and made a video and kind of shared the step-by-step guide as far as how to get started and going through the process of what M1 Finance offers. So if you guys haven't checked out that video, or M1 Finance, if you guys are you guys looking for a more automated robo-advisor platform, M1 Finance could definitely be that. Now, I am planning here in 2021 to move from M1 Finance to Fidelity, but that is because I do want to be a bit more aggressive, and I don't just invest in ETFs, I do invest in single stocks as well, and I want to be able to sell out of positions that I feel are, I want to try and time my buys and sells at times. So that is where I want to move away from a passive platform such as M1 and kind of consolidate all of our accounts between mine and my wife's, because we have maybe 9 or 10 different accounts out there between both of us, into a single place where we can do everything all in one. And our portfolio over on M1 Finance broke above that 29,000 mark, so that was pretty new. And this past week, I know the market itself, we had the S&P down 0.83, Dow Jones down some as well, but overall our portfolio is actually up for the week around 0.8 some percent. So I believe it was pretty positive this past week. So we did break this new all-time high, so we may see that portfolio hitting 30,000, which is really excited for a 3-year time frame in M1 Finance and beyond. So that is going to be it for this video. Let me know down in the comment section below, did you guys like having some of the news early on in the video from what is going on this past week? I thought that was kind of fun. I was looking at a few different articles as far as what is going on, not only here in the States, but also globally. So I do like to see, I'm actually kicking myself in the butt for having not invested in Tesla in the past. I had owned a tiny bit, like I owned Tesla back in 2016, 2017, and I sold out of it in 2019. I think I bought it for 300, sold it for 400 at a time, but there was a lot of time there in between where it fluctuated a lot, and I didn't look at Tesla as being very stable. But then here in 2019 and 2020, it has just had crazy growth, and it makes sense. It does make sense for where they were at in the past to where they have came to today. So that is going to be it for this video. Again, if you guys are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, we cover the stock market, real estate, entrepreneurship, personal finance. If there's anything you guys would like to have discussed here on the channel, let me know down in the comment section below. And thank you guys for tuning in. I will see you next time. Have a great day. Bye.